It began not with a bang but with a quiet transaction. On a seemingly ordinary Tuesday far from the bustling floors of the New York Stock Exchange, a landmark deal was settled. Major shipment of liquefied natural gas, sourced from the United Arab Emirates, purchased by China. Not with the US dollar, with the yuan, settled on the Shanghai Petroleum and Natural Gas Exchange. It might seem like a minor footnote, but make no mistake, a declaration of intent. A carefully calculated maneuver that sent a tremor through the international financial system. The move analysts had been whispering about. The moment theory became practice. For decades the US dollar was king. The language of global trade, the bedrock of central bank reserves, the ultimate safe haven. China spoke a different language, in energy. To understand the magnitude of China's move, one must first appreciate the colossal power of the US dollar. Its dominance is not an accident of history, it is the very architecture of the modern global economy. Imagine the world as a vast marketplace. In this market, nearly every significant transaction, a shipment of Brazilian coffee, a South Korean semiconductor, is priced and paid for in dollars. It is the world's reserve currency. Central banks across the globe hold vast quantities of dollars as a stable store of value. This wasn't always the case since the end of World War II. The dollar has sat firmly on this financial throne position cemented by the Bretton Woods Agreement in 1944. The dollar's power stems from a potent combination of factors. First and foremost is trust. The world trusts that the United States has a stable political system, a robust legal framework with strong property rights, and independent central bank, the Federal Reserve, committed to managing the currency's value. This trust is backed by the sheer size and depth of the U.S. economy, the largest and most liquid financial markets in the world. If you want to buy or sell billions in assets quickly, you do it in the U.S. market using U.S. dollars. This creates a self-reinforcing cycle because everyone uses the dollar, everyone needs the dollar, which only reinforces its central role. So what exactly is China's one move? It is the creation and promotion of what is now being called the petro-yuan. This is not a new physical currency. It is a strategic initiative to establish the Chinese yuan as the preferred currency for the global oil trade, for the global gas trade. For half a century, the global energy market has been built upon the petrodollar system. It was solidified in the 1970s. Major oil-producing nations, led by Saudi Arabia, agreed to price oil exclusively in US dollars. In return, the US provided security guarantees. That ensured massive global demand for dollars and cemented its reserve status. China's move is a direct assault on this system. As the world's largest importer of oil, China has immense leverage. Its strategy: offer energy exporters a choice. They can continue to trade in dollars, they can sell their oil to China and be paid in yuan. They can sell their gas to China and be paid in yuan. China linked the offer to the Shanghai International Energy Exchange. Any yuan received there can be immediately converted into gold. That bypasses concerns about holding a less convertible currency. This is more than finance, it's geopolitical. Parallel to its petro-yuan strategy, China is advancing on another, even more revolutionary front, the creation of a sovereign digital currency. Known officially as the ECNY, the digital yuan is not a cryptocurrency like Bitcoin, which is decentralized and anonymous. Instead, it is a digital version of China's physical currency, issued and controlled directly by its central bank, the People's Bank of China. This project is years ahead of similar initiatives in the United States or Europe. While Western central banks are still publishing research papers and conducting theoretical studies, China has already rolled out the digital yuan in pilot programs to millions of its citizens, processing billions of dollars in transactions. The power of the digital yuan lies in its efficiency and control. For domestic users, it offers a seamless, low-cost way to make payments, potentially replacing cash Alipay WeChat Pay. But its international implications are far more significant. The ECNY is designed to operate outside the existing global financial plumbing, most notably the SWIFT messaging system. When we compare the US dollar and the Chinese yuan, we are looking at a reigning heavyweight champion versus a formidable and rapidly rising contender. The dollar's strengths are deeply entrenched and have been built over nearly a century. Its primary advantage is trust, rooted in the transparency of US institutions and the rule of law. US capital markets are the deepest and most liquid in the world. You can move astronomical sums of money without causing major price swings. Furthermore, the dollar is fully convertible, meaning anyone can exchange it for any other currency with no government restrictions, a feature that global investors prize above almost all else. The Chinese yuan, on the other hand, has a different set of strengths, largely derived from the sheer scale of the Chinese economy. China is the world's largest trading nation and its second largest economy, a status that naturally creates demand for its currency. The yuan's value is tightly managed by the People's Bank of China, providing a level of stability that can be attractive to trading partners who want predictable exchange rates. The petro-yuan, the digital yuan initiatives. The battle between the dollar and the yuan seems like a high-stakes game, but it will hit ordinary people hard in the US and around the world. For American consumers, the dollar's dominance has been an invisible subsidy for decades. Because the world needs dollars to buy oil and other goods, there is a constant demand for our currency. This demand keeps the dollar strong, which makes imported goods cheaper for Americans. Electronics, made in Asia. Clothing, made in Asia. Cars, from Europe. Your purchasing power at stores like Walmart and Amazon is boosted. If the dollar's role diminishes, that benefit erodes. A weaker dollar means more dollars to buy the same foreign goods. New smartphone, sneakers. The privileged position of the US dollar is arguably the most critical pillar of American global power, perhaps even more so than its military might. This financial supremacy gives Washington a unique and powerful tool: the ability to impose economic sanctions with devastating effect. By controlling the primary channels of global finance, the US can cut off rogue states, terrorist organizations, rival nations from the lifeblood of the world economy. When the US decides to sanction a country like Iran, North Korea, it effectively bars them from conducting most international trade, as most global banks are unwilling to risk losing access to the dollar system themselves. The rise of the petro-yuan, the digital yuan, directly threatens this instrument of power. China is explicitly creating financial systems that operate beyond the reach of the US Treasury Department. If Russia sells oil to China for yuan and then uses that yuan to buy goods from Brazil, the emerging currency competition is not just an economic phenomenon, it is the financial frontline of a new era of great power competition. The world is increasingly bifurcating into two distinct economic and technological spheres. One centered around the United States and its democratic allies, and another centered around China and its authoritarian partners. The dollar and the yuan are becoming the respective currencies of these two blocs. This division is most visible in the global south, where nations are increasingly being forced to choose sides, not just diplomatically but financially. A country that relies on Chinese infrastructure loans through the Belt and Road Initiative may find it more convenient or even necessary to conduct its trade in yuan. This financial division could accelerate the trend of deglobalization, or more accurately, the rewiring of globalization along geopolitical lines. Supply chains, which were once designed purely for economic efficiency, are now being rerouted to align with national security interests. A US company might be hesitant to build a factory in a country that is firmly in China's economic orbit. The era of the dollar's unchallenged monarchy is over. That does not mean the dollar is on the verge of collapse. It will, for the foreseeable future, remain the world's most important currency. However, its reign is now being contested, and its share of global power will almost certainly decline. The bold prediction is this: we are not heading toward a world where the yuan replaces the dollar, but rather toward a multi-currency world. The dollar will become the first among equals. It will include a strong, regionally dominant yuan, and perhaps a more assertive euro. The 21st century economy will not have a single king, but a contentious oligarchy of currencies. This transition will be fraught with instability. History shows shifts in the global financial order are rarely smooth. They bring economic crises, political tensions, even conflict. As the petrodollar phrase, energy prices could get wildly volatile. Shifts in reserve holdings could trigger jarring currency moves. Without a single lender of last resort, the next downturn could be worse than 2008.